Swarts here with Ellis Hammond. We're going to be talking about a big opportunity here in Texas. Ellis, tell us about the property and a little bit why you like it.
Yeah, we're in Allen, Texas, which is North Dallas, one of the top suburban markets of DFW. This is a garden-style deal, about mid-'80s vintage. I mean, look, this is the leasing office. This is probably one of the nicest leasing offices that I've seen in a Class B deal. Love this asset. One, just amenities-wise. I mean, we're right across the street from one of the largest high schools in the North Dallas area, one of the top 5 high schools. So location, you can't beat it. But also the ability just to drive revenue. I mean, we have about 58 units that still need to be renovated, which have a huge delta there. This market, from a rental perspective, has grown more than 15% a year. The home prices in this area have grown more than 30% every single year. So just, I mean, you talk about growth, you talk about excitement in this area, and then you have the opportunity to live on 13 acres, 2 pools, incredible place. So this is just a really fun place for families. I mean, this is the leasing office now, but you know, in 6 months, this will be a place where families can come and hang and do birthdays and wedding showers. And so we just love an asset like this where we get to be next to families and serve families, next to the high school. And, you know, this is where the school bus drops all their kids off right here. So we love this deal for a lot of reasons.
Amazing. Let's go check it out.
This is the freshman center in here in Allen, so you can see all the kids coming. I mean, a lot of the families that live here, their kids just walk across the street to go to school. The high school's right here, the freshman center's right here. So you can see, I mean, this is a great location for families.
Beautiful. Keep going. Ellis, I'm curious a little bit about some of the breakdown here. Give us the vintage, give us the construction, give us the unit mix so we have some of the stats on the deal.
Yeah, so this is garden style, right? I mean, you can see just walk up, no elevators, love garden style, easy access to your apartment. You can see, cool too, what I love about this deal, and we have this planned for about 50 to 60 units. These fences right here, we can actually extend these into patios and give people kind of more living space, which is really cool. And so this is about, I said, mid-'80s, 1985 built, you know, which is a great vintage. The previous owner put about $5 million of exterior capex into this. I mean, you can tell, like, this is beautiful, and the landscape of this deal is amazing. So a lot exterior-wise nothing needs to happen. I mean, look, you know, it's immaculate. There's 2 pools we'll go tour here in just a minute. Our real chance to capture value is in the interiors. So we have about 58 units, close to 60 units that we're going to go and upgrade. New finishes, right? Stainless steel appliances, new flooring, etc.
And by the way, it's important to point out as well. First you have a brick exterior, and then you have the pitch comp shingle roofs, and then you have the central ACs that are on the ground.
Yep.
Those are things that are 80s and 90s construction that really started to turn to a more cost-effective and energy-efficient type of building, and this being has great bones, which is really important. Yeah. Now, the second thing I want to mention is you talked about the units and the rental increases, right? Because right now, a lot of the challenges people are looking at are interest rate versus cap rate, right? And then the ability to take that spread. And, even a year and a half ago, a lot of people are maybe buying at it could be 3.5 to 4 cap, but they were borrowing at like 3%.
Right.
Now we've seen an influx where interest rates are, let's say, 4.5, maybe 5, and some cap rates are still hovering around that, maybe 3.5 to 4.
Right.
However, the key is that delta between that rental increase. So talk about Texas. There's no rent control. We're from California where we face that all the time, and the ability to raise the rent, especially on those 58 units. Yeah. How much is it going to cost to do that? To turn those units, and what's the increase in rent?
So we have about a $20K budget we have classic units. Our contractor's right behind us, but about $20K, and we could probably do it more affordable, 15 to 20 grand on the classic units. On the 2-bedroom, that's a $550 delta that we can capture instantly on that, which is significant. The 1-bedroom's a little bit less, about $350, and I'm not comping that to the market, Brett. I'm comping that to what we're currently getting in the asset. So that's really important that we're not hopeful for that. We're really confident that we can get that. And I think to your point about the inverse of interest rates and cap rates, that's really important to pay attention to. If you were buying kind of core plus, I'm just buying hoping for appreciation, dude, our ability to drive revenue in this asset is extensive. I mean, we were talking about in the car, just the numbers there. I mean,
So let's break that down. There's another 140 units or so.
Right.
And what do you think the loss to lease is on average doing nothing to the units?
Yeah, so I mean, let's just say on our renovated stuff, as we capture that, that's about $350,000 to $400,000 of annual revenue that we can collect right there. Our loss to lease is an additional $300,000 to $400,000 of revenue. So that's about $800,000 to $900,000 annually that we're going to capture from the rent.
And let's break that down so you know what Ellis is saying. So on those 60 units are on average about $500 per unit. And you take that's about $30,000 per month. That's post renovation, right? So that's $20,000 in renovation. And that is about $360,000 or so in just revenue. Right. Now the other revenue is just the units that are existing here right now, and those are about $250 that are either have been some renovated or
those are actually renovated.
Those are all renovated
units.
And so that's just $250. That's just lost to lease.
And the reason that is, this submarket is just. I told you, home prices have grown 30% a year. Rent growth has grown 15% a year, and so part of that is and this is what we do as operators, taking about 12 to 24 months to what we call kind of restabilize or bring that rents up to market and begin to capture some of that. So it's a play, right? We're going to renovate some. We're going to begin to kind of increase rents across this property as we do our thing with community services, things like that. So we're adding value into the property as well. But yeah, it'll take about 12 to 24 months to really stabilize this asset from renovations, loss to lease on this deal.
Hey, want to go check out the pool?
Let's do it.
Hey, so Ellis, we're here now in this low density space, which is just so important because it doesn't feel like just, urban, high density, and just, you have this great green space, right? You have this dog park behind us we're going to walk to. You also have the fitness center behind here. So tell us a little bit more about why you like the deal.
Yeah, I mean, this is like the
intangibles,
right? Of like, this is why you have to walk real estate. This is why you have to kind of know your area. I mean, there's a comp of ours or like a competitor of ours across the street. It's just like it's just sitting on concrete. I mean, we're on 13 acres. I mean, I kind of just imagine like, a Saturday afternoon where we do a community service event where we have tents here and cook out, and families can come and enjoy this, the huge dog park right here. So to me, as a multifamily guy who's kind of the deal junkie, this is why I think you have to get on site. You have to walk the asset and realize like what's important to families. And so talk about them being able to walk across the school. Well, also on the weekends, like just having space to play, play soccer. And so you kind of think about that, like what would cause someone to not just come and want to live here, but stay here, right? And so, part of that is just the amenity of space, the amenity of freedom that is really hard to get in apartment rental living. And so for that reason, we love this asset. Clearly, we have room to build things like storage, and we can't actually build any more units, but we can build some storage space on here. But for right now, we're just going to enjoy the space we have.
Excellent. Go check out the rest of the property.
Yeah.
Ellis, we're here on the tennis court. I've heard that you were like a tennis star in high school, maybe even some college, or you flirted with some pro, or tell us about that.
Yeah, no, I have zero tennis experience, more of a pickleball guy, which actually is probably one of the ways we can kind of better utilize this space is, we talk a lot about kind of serving our tenants through community service events, etc. We plan to turn this into a pickleball court, but this is just one of the amenities. I mean, we have our second pool right behind us. We had the first pool earlier. So again, this is why I love rental investing. I mean, think about this. If you buy a home, $350,000 down the street, that's the median home price in Allen, Texas. So your mortgage is going to be $2,500 out the door. For $1,700 for a 2-bedroom here, you get 2 pools, you get tennis court, you get green courtyards, you get to live next to people you love.
Ellis, we're in the brand new unit here, renovated. Tell us a little about the features, the rent, and also maybe some additional charges that tenants
so we're in a upgraded 1-bedroom here, stainless steel appliances, quartz countertops, inlay sinks. I mean, these are just kind of the upgraded finishes, laminate flooring. So this is, this will range just north of $1,400 for someone to come in and have a brand new, nice, clean living space.
What are the additional charges for the tenant? So there's pet rent, is there ratio utility billing?
Yeah.
Anything else on top for parking?
Yeah, that's why we love multifamily, right? Because the opportunity to capture other income items. So this is actually a laundry room right here that has hookups. So we can start with laundry. We can actually services where we can rent out laundry units. There's utility bill backs. There's pet. If folks want to join, have a pet here. There's a pet fee to that. We have a beautiful dog park, which I think we saw earlier. So yeah, there's several different additional income items. This is a second floor unit, but even on the first floor we have patios where we can kind of build out larger living spaces on that too. So there's several additional income items.
Excellent. We're about to show you an amazing opportunity. Everything's big in Texas, right, Ellis?
That's right.
And this investment opportunity that you put together is incredible. Give us the 30-second of why someone might want to invest in this opportunity.
Cash flow. This thing cash flows early on. The ability to capture upside through rent appreciation, through value add business model. A number of units is the most important number in real estate, and our ability to drive revenue across this portfolio is going to be massive, and you're going to benefit from that as the investor.
Amazing. So you got cash flow. You also got depreciation to offset that. We call it tax flow here at Capital Gains Tax Solutions. You want to make sure you not only have cash flow, but you have the tax flow to offset that. And you have bonus depreciation this year. Tell us about that, Ellis.
Last year, for 100% bonus depreciation on this deal in particular, if you put, let's say, $1 million in, you're going to get at least $500,000 of write-off in year one. So if you 100K is 60 grand, 50 grand. So huge opportunity to not just benefit from the cash flow appreciation, but also get a nice write-off to offset other gains in your portfolio.
If you want to learn more about this, Ellis, where do they go?
symphonycapitalgroup.com/invest.
You want to learn about the Deferred Sales Trust and how to defer tax on the sale of highly appreciated assets? You can go to capitalgainstaxsolutions.com. Not using a 1031, by the way, and to be able to invest in things like what Ellis has right here in Texas. Thanks, everybody. Talk to you soon. Bye.